Let's talk about the most obvious, biggest chip stock pick of 2024 for us. None other than Nvidia. Besides my dud of Lattice Semiconductor, let's talk about a couple of others in our picks. So this one, I'm very pleased with the performance for us and for everyone that's been invested in it, but there needs to be a little caution here. Hey everyone, welcome back to Chip Stock Investor. Today we're going to do a mid-year review on our chip stock picks for 2024. If you haven't seen it yet, we also have a video on our non-chip stock picks, a mid-year review of those. So make sure you check out that video as well. But let's talk about our bread and butter, chip stocks.
And similar to the intro to the last video on non-chip stocks, we're not doing the 6-month review because we're considering selling or making any big adjustments to these companies. We still like all of them. We're still comfortable with holding them. This is just merely to get an update on where we are as business owners, actual owners of these companies, and see what's going well, maybe what's not going so well, and if there's any opportunity to add to any of these picks. Because when we make a buy, our intention is, unless something goes wrong, very obviously wrong, our intention is to own it for at least a year or two before we consider selling a losing stock, a weed that needs pulled from the portfolio. We're also going to weight these from largest to smallest as measured by market cap, because that's how we weight our portfolio. We use a barbell approach where we allow core portfolio holdings, big businesses, companies that we've owned for a long time and we have allowed to naturally grow into a core holding over time, balanced out by a larger basket of small and mid-cap stocks, usually at least 24 of those that we nibble on from time to time, or we dollar cost average into gradually over time. And if they're going to become a core portfolio holding for us in the future, they're going to have to earn it.
Before we jump into this list, make sure you hit the subscribe button. Helps us out a lot. Free and easy way to support us here at Chip Stock Investor. And check out the Semiconductor Insider membership. It's $5 a month, gets you all of our video notes, show notes, Discord access, live events over there on Discord, which we're going to be having one coming up very soon. Make sure you check that out. Link is in the description below. And also, just want to mention that we've partnered with finchat.io. You'll start seeing a lot of their charts and analysis from them in our videos. You may find that finchat.io is useful to you in your investing journey. You can get 15% off a membership with our discount code below. Let's talk about the most obvious, biggest chip stock pick of 2024 for us. None other than Nvidia.
Yeah, it's doubled in value this year. Casey, I'm all at once surprised and then also not so surprised. We've owned Nvidia for many years. Of course, it was one of our top picks when we started this channel in the autumn of 2022. And it's very quickly, as a result, become far and away our largest portfolio holding. It was actually your top pick at the beginning of this year, though. Why is that? I think the folks probably that have been around a while know that and want to hear from you. What led you to that decision?
For me, I think it all comes down to the conviction from CEO Jensen Huang. Years ago, he saw the potential for AI to change the world, and not just so that we can chat with an AI chatbot. It's much more than that. He truly believes that AI and accelerated computing can change the world in a meaningful way. Ultimately, I agree. I think AI has significant opportunity to change everything we do in our lives. I think it also has a lot of potential to make a difference in the world. I don't think that AI is a bubble. I think it's going to become more and more present in our day-to-day life. And ultimately, I guess that leads me to say that if you want leading edge tech to stay competitive, you have to choose NVIDIA.
And now, Casey, it was no surprise at GTC in March that NVIDIA unveiled a new GPU platform, Blackwell. That was not a very well-kept secret. Jensen has been saying all along that they're going to have multiple new product announcements a year now. They're using AI in their own development. So exciting stuff. Suddenly, everybody is very, very keenly aware of who NVIDIA is, even if they did not just a year or two ago. You said AI isn't a bubble. Accelerated computing isn't a bubble. I fully agree with that. There are very, very fundamental differences in this infrastructure build out right now from the dot-com era, where some folks like to draw some comparisons. That said, is there eventually going to be a crash?
There always is. In one form or another, there will always be a crash to various industries. And so, yes, it is going to happen. NVIDIA is not going to have this runaway growth for forever, but we don't see that happening anytime soon.
Yeah, and we've explained this in numerous past videos on AI and on NVIDIA and accelerated computing. There's a brand new market currently being created, and that's these AI training data centers. Some expectations that these things will eventually reach $1 trillion in total value, not annual value, total value. And once those are finished being constructed, those will be in need of a hardware refresh roughly every 4 to 5 years. And so that will join the existing data center value of roughly $1 trillion. Global data centers worth about $1 trillion, which also currently undergo a refresh cycle roughly every 4 to 5 years. That's ultimately why NVIDIA has absolutely exploded higher. Now, we've had to adjust our assumptions a couple of times as a result. And after the latest earnings update, is NVIDIA expensive? Is it cheap? Are we neutral on it? Where are we at?
This is our most recent assumption for this fiscal year 2025, which will end in January of 2025. And this slide we made for their most recent earnings update. And at that time, shares were trading for about 36 times enterprise value. Since this slide, shares have gone up another 40%. Now they're trading for about 50 times expected operating income. So ultimately, what we're saying is we're not adding to our position in NVIDIA. As Nick said, we have a full position in this company, but we're certainly not getting rid of our position.
Yeah, this is one of those AI stocks where the valuation, depending on how much growth you think NVIDIA is going to get in the next year, might be finally nearing what's considered expensive. But there's just so much we don't know because this is a brand new market. At least the AI training infrastructure side is a brand new market. Folks, if you've got fear of missing out, I think the rest of this video might be more useful for you. Let's talk about some other chip stocks.
We'll show you the performance of these other chip stocks. In blue, you can see NVIDIA, far and away the biggest gainer so far this year, but we'll talk about some of these other ones now. Pure Storage, Qualcomm. In green, it says 2330, that's Taiwan Semiconductor. And then Silicon Motion, Microchip, Lattice, and On. Let's talk about Qualcomm.
Qualcomm up over 50% this year. I think that took a lot of investors by surprise because this is not a high growth semiconductor business, but this is one that for going on 2 years now just looked really, really cheap after it got clobbered by the bear market. And so what was overlooked were two items. The first, the non-highlighted segments of Qualcomm, handsets or smartphones, and then the bottom one, Internet of Things, IoT chips, coming out of a very deep cyclical slump. So Qualcomm, not a high growth business, but because it's cyclical, there are going to be these periods of more rapid growth after periods of decline. We're now just entering that period for smartphones and IoT devices. So you end up getting some big increases in profitability. But then that middle section, automotive, this is Qualcomm's, at the moment anyway, Qualcomm's high growth market. You can see they are addressing virtually every part of the modern vehicle with their connectivity chips, as well as their Snapdragon logic chips. Check out our last video where we discussed where it seems like Qualcomm is picking up a lot of market share in the automotive industry with its portfolio. It's now trading for about 30 times trailing 12-month earnings. It's not the cheap value stock it was just at the beginning of this year. We'll see how earnings growth pans out the second half of this year. The market has probably finally caught on to the fact that there's some big profitability increases coming and some new products like the Snapdragon X Elite for laptops, a new ARM-based laptop chip, finally getting Windows laptops up to speed with what Apple has been able to do with the MacBooks. That could lead to a little bit more outperformance for Qualcomm if that's a hit. I think we're happy with where we're at on this one. Happy to hold. Okay, Casey, I want to ask you, and I know the folks want to ask you your thoughts on Pure Storage. This was one of your top picks at the beginning of the year. When we did the video, you got some comments saying, why are you picking this? This isn't even an AI stock. And then suddenly, as of late, it seems like everyone thinks this is only an AI stock. And it's also up
97% this year. Not bad.
Yeah, indeed. Okay, what happened?
So, the reason that this is now an AI stock, there's a lot of text on this slide, and I'll try to summarize it, but I feel like this is ultimately what we see as the reason for this big increase in interest for Pure Storage. So, speaking about hyperscalers, those are the companies that are buying all of those NVIDIA chips and putting them in their data centers. They traditionally have high performance storage based on solid state drives or multiple levels of lower cost hard disk drives. Now, if you remember, Pure Storage provides flash drives. The reason that flash drives are so appealing to these hyperscalers is because they reduce power, space, and cooling requirements for data storage. The second thing is they reduce the need for sophisticated caching and other technologies that make up those hard disk drives and make them more lower performance. Third, they improve server performance by accelerating data delivery. And finally, they improve the reliability and longevity of the storage, which ultimately reduces cost for these hyperscalers.
Okay, so no surprise for us. And of course, Pure Storage has a really good software business built atop of those solid state storage systems that they build for their customers, helping their customers manage those storage solutions. So everyone's caught on to this as being a potentially long-term growth story worth paying attention to in the AI era. But what about the stock price running up like it has, almost double year to date? Surely they must have increased their financial guidance because of AI, right?
Yeah, this is definitely an important point, Nick, because nearly 100% run up in stock price. You would think there would be some financials to back this up, but take a look at the fiscal year 2025 growth rate and revenue expected last quarter. They said revenue was expected to be 3.1 billion for 2025 with a 10.5% year-over-year growth rate. Fast forward to this most recent quarter, and the outlook is exactly the same. Yet the stock price has continued to go up. So this one, I'm very pleased with the performance for us and for everyone that's been invested in it, but there needs to be a little caution here.
I agree. Would not be surprised if this one sells off really hard after the next earnings update. That said, if you can manage to do so, ignore the stock price. When that happens, it's just part of the name of the game. This is a really high quality business. We're focused on the long term. So what we thought was a pretty good value at the beginning of this year, probably, or maybe definitely not a value anymore. So we're happy to hold, but not adding. Okay, Casey, another one of your top picks for the year, Lattice Semiconductor, was off to a pretty good start, and then it fell off a cliff. What happened?
Yeah, I was pretty excited at the beginning of the year, but now year to date, Lattice is down 12%. And there's been a significant pullback recently because of James Anderson leaving as chief executive officer and going to Coherent. And We recently did a deep dive into Coherent. You can check out that video here on the screen. It will give you some information on our thoughts on that. However, in the interim, Lattice Semiconductor appoints Chief Marketing and Strategy Officer Issam El-Ashmawi to the CEO position. We're just going to have to wait and see what happens in the coming quarters in the second half of this year. The company has become very focused in the FPGA pure play market, and it's possible that this new interim CEO, being part of the marketing and strategy department, may stay the course.
Yeah, Anderson did a fantastic job getting Lattice refocused on its most important growth strategies when he took over back in 2018. So at this point, we're not worried about the C-suite mix-up, but stay tuned. Hopefully we get some more details in July or early August when Lattice reports its next quarterly update.
Let's talk about a couple companies that were your top picks, Nick. Silicon Motion to start with.
Yeah, this is one of our small cap basket stocks we purchased in 2023. A lot of confusion around this one because it was supposed to be acquired by a company called MaxLinear. MaxLinear canceled that acquisition and has subsequently gotten absolutely punished by the market since then. We went with Silicon Motion. We really liked the financials, especially after it got beat up during the bear market for PCs. So this was kind of a small cap bet for us on a rebound in the PC market. They do flash memory controllers, a little bit of expansion on their part into memory controllers for larger applications like automotive and data center. But by and large, this is a bet on the PC market rebound. And it is up about 50% this year as well. You can see the rally in revenue on a year-over-year basis and a near doubling in adjusted earnings per share as they recapture some profit margin as they add more revenue back into the mix. If you don't know what Silicon Motion is, take a look at our last video on this earlier this year. But given the type of operating leverage inherent with a company like this, it currently trades for 45, maybe close to 50 times trailing 12-month earnings. I actually think this is still a pretty decent value stock at this particular point, if we assume not just the recovery in revenue, but in tandem with that, them continuing to recapture operating profit margin along the way. I think we're going to probably see some pretty dramatic increases to earnings for Silicon Motion the second half of this year as the PC market continues to stabilize. I like the small cap stock. This is one that personally I think I'd buy again.
Besides my dud of Lattice Semiconductor, let's talk about a couple of others in our picks. You can see that On Semiconductor is currently the lowest on this chart at down about 13%. And the second one is Microchip, up just over 6%. Both of these companies are focused on more of the industrial semiconductor market. On Semiconductor is primarily a power chip and silicon carbide semiconductor IDM. Microchip, a hybrid, fabless, and integrated device manufacturer. What's holding these down this year, Nick?
First of all, that was very gracious of you to say that these were our picks. These two duds, the first half of this year, were actually my top picks for 2024. But I'm going to stick with it, Casey. Here's a chart that we have shared numerous times this year, and I think it's more relevant than ever because, again, the AI infrastructure frenzy that Nvidia has kicked off has a lot of stocks trading not just at all-time highs. That's not the issue. Some of them are approaching what we could probably start to call expensive, a bit stretched in valuation based off of what growth expectations are for the next year or so. So if we're looking for more reasonable purchases to make right now, I think we need to look further down this chart at other parts of the semiconductor market that are coming out of the down cycle, that are coming out of the bear market, because it's really Nvidia that dragged this market out of the depths of what's, I guess, deemed not a recession, but probably in all actuality, a recession in 2022, and definitely a bear market. Consumer electronics, PCs and smartphones, I think Qualcomm we're happy to continue holding, but not cheap anymore. Silicon Motion, I think, based on our growth estimates for the company, still a value in this particular segment. Cloud and enterprise, this is an interesting space that seems to continue to get deprioritized, and accelerated compute being the preference for a lot of large businesses. So Nvidia kind of gobbling up this part of the market as it comes out of the growth cycle. Another reason why I think we're more than happy to continue doing nothing with our Nvidia position. All the way at the bottom, auto, industrial, and power chips, all of the companies that play in this space have been signaling that we're now at a bottom. In the second half of this year, we should start to see constructive increases, at least on a quarter-over-quarter basis, in higher revenue and profitability starting to rebound. So if we were going to make a new list of top picks today, I think that's where most of our focus would go. So Lam Research, obviously big rally in this one, but plays heavily into the manufacture of memory chips. So we can call that maybe a bit of a bet on the cloud and enterprise compute market. But then a lot of these other ones fall very squarely into the auto, industrial, and power chip segment. Axcelis Technologies, one of our favorites that we've covered a couple of times this year now in power chip equipment making, ion implantation, Air Test Systems, a picks and shovel play on silicon carbide, on semi and microchip. We just talked about. It looks like and sounds like we should start to get a rebound the second half of this year. And then Renesas, which we did actually one of my favorite research projects we did back in March on Renesas, got very few views, very little feedback from viewers. I would check that out. Japan's Renesas, really, really solid run business and making some interesting acquisitions.
Yeah, I completely agree, Nick. I think at the beginning of the year, we said that we were going to take a little bit of a break from equipment manufacturing companies, but we've come back around to them pretty quickly because of where we are right now in the cycle. Lam Research has definitely become one of my favorite companies. Air Test Systems is one that I follow pretty closely, and I really, really have a lot of excitement about in the coming quarters. Let's briefly talk about our bonus pick that we had, Taiwan Semiconductor Manufacturing. Any thoughts on where that has fallen in this first half of 2024?
I think let's keep comments on this one short and sweet. Obviously, a very, very well-run business. If you're looking for a good bet on the AI super cycle, specifically AI chips, you feel like you maybe missed the boat on Nvidia, Taiwan Semiconductor Manufacturing, probably going to get a lot of upside to its revenue and profitability as a result from all of this AI and accelerated compute infrastructure build out. So if you're looking for a place to stash some money on that particular part of the market, I think TSMC, let's call it still a bonus pick from Chipstock Investor.
All right, there you have it. There's our mid-year update for all of our chip stock companies and a few that we've been adding to these last few months. If you haven't yet, make sure you hit the subscribe button and make sure you check out some of those videos we referenced below. And then, of course, we will have a video here on the screen that you can take a look at right after this one on the semiconductor manufacturing equipment portion of the industry. Check that out. We'll see you again soon at Chipstock Investor.